Well, let's now put the spotlight on Pine Labs' 3,900 crore IPO that opened for subscription today. It features a fresh issue worth 2,080 crores and an offer for sale element as well of 1,820 crores. In fact, the price band has been fixed at 210 to 221 rupees per share. The issue is scheduled to close on November 11th, and these funds that the company has raised will be used to repay debt, upgrade tech infrastructure, and expand into international markets. In fact, the company is backed by marquee investors such as Temasek Mastercard and Peak 15 Partners. In fact, let's listen into an excerpt of an exclusive conversation that we had with the management of the company earlier in the day today.
Look, we are a very well-diversified fintech company. We operate in the entire fintech ecosystem, doing everything from POS machines to doing online payments to doing bill payment services. But we also do what is called as issuing. So issuing of prepaid cards and issuing of accounts is something that we do. We believe that we are actually building one of the world's greatest fintech company coming out of India.
And can you also take us through the revenue model that you have? How do you get your revenue? Which are the segments which contribute most for your revenues?
So we operate in two large business lines. One is the digital infrastructure business line, and the second one is what happens on the issuing side of the business. On the issuing side of the business, about 30% of our revenues comes from there. There, what we do is we create accounts, wallets, prepaid cards, and we do all the back-end technology associated with it. And there we earn money on processing of transactions, so creating of accounts, holding of money, moving of money, processing of all payment transactions. That's where we make small, a few paise and rupees on every typical transaction, and that's about 30% of our revenues. The 70% of our revenues comes on the digital infrastructure side. Within the digital infrastructure side, one of the components is what we do on the POS side. On the POS business, you would have typically seen Pine Labs in all the major hotels, restaurants, retailers. That's the business that we are most famously known for. Less than about 50% of that digital infrastructure business actually comes on our POS business. The second component out here where we do a lot of volumes is where we do all these offers, campaigns, installment payment solutions on our terminal. So for example, if you go to any of the digital retailers and you go and make a purchase for a television, and you want to get that converted into installment payment transactions, we process those installment payment transactions. And that business of ours has been growing steadily over the last 4 or 5 years. And then the final component on the digital payments infrastructure side, we make money in terms of online payments and also what we do in terms of bill payment processing. In each of the businesses, we have two types of revenue streams. One, what we charge as a SaaS-based fees on a monthly basis to our merchants and banks and financial institutions. Second is we then charge by the transaction. We charge by the transaction. We also charge by the value of the transaction. That's how our revenues are spread out. As you would have seen in the RHP, last year we were able to show almost about 28-29% revenue growth on a year-on-year basis.
It's interesting. Do you think this area is getting crowded and there is a lot of competition here, and that brings in the question of whether the kind of transaction fees that you're charging, will that be under pressure going forward?
In many of these areas, we've actually been the market leader. So we've actually seen that over the last 3 years, the GTV or the volume of the value which has been processed on our platforms has compounded at almost 60% over the last 3 years. The number of transactions on our platforms have compounded at 50% and more. And then what we've been able to show is we've been able to show a consistent revenue growth of more than 20%.